Hello, everybody. Welcome to this session. So, today I'm going to talk about some basic things on the economy. So that in part two, we will go into more details about the current economic crisis and how you can now how you can negotiate that. So, in this presentation, I'm going to cover some basic things so that when we go to the next part, we have the necessary understanding in place. So, let's first understand some money and fiat currency basics, what they are, the domination of United States dollar, what do we mean by inflation and how it affects the economy, and yeah, deep dive into wealth concentration and wealth inequality. So, how that works in our present world, and then the nature of economic crashes, when and how they happen, because economic crashes have been happening for a long time. So we have a good understanding of how they happen in the world. And then we'll also look at some basic things about banking, especially the fractional reserve lending, and some references. Okay, so I may have to go a little faster because it is slightly more material to cover. So before we dive into the main points, I want you to think about these points. Okay, so today's world is ruled by economic powers. It is not ruled by politicians. Okay, it is not ruled by the so-called authorities. The real authority is wealth, and those who control wealth control the world. Politicians are there only to maintain the illusion of democracy or communism, or whatever model, the political model that the country likes. They really do not have any power in anything practically. They are there to pacify people and assure them that we will take care of you, that kind of a thing. But they really don't do anything except making sure the real value are taken from the people and then funneled to the more wealthy people in the society and across the world. So, centuries of wealth concentration, it has resulted in very few people controlling all the organized human life in this world. Uh, I gave a brief outline of this phenomena in my earlier presentation. So, we will see more about it in this talk as well. Unfortunately, this idiom of absolute power corrupts absolutely is very true. And those people who have absolute control in this world seems to be absolutely corrupt. Otherwise, we would not be living in such a pathetic situation as we are living today. Uh, People at the top really don't care about anybody's welfare, your welfare or my welfare. They are more interested in keeping their power intact, and they are more interested in what do you say, going to the top among themselves and making sure that their lifeline, which is your efforts and our money, that keeps coming in. Okay, so let's understand what this term money and fiat currency actually mean. When a currency is backed by physical assets such as gold, it is called money. For example, every 100 rupees or every 1 rupee is backed by yeah, 1 rupee worth of gold in the possession of the government, then that is called money. So when a currency has no such backup, but it is simply guaranteed by the government, then it is called a fiat currency. So fiat currency, as you can see, has no inherent value. There is nothing that backs it up, except that there is something called a government which promises that this piece of paper has some value. So, if you don't believe that that government has any legitimacy, then you will also have to believe that such a note carrying such a promise has no value. So, as you can guess, money tends to have more stability than fiat currencies because it is usually backed by gold or silver or both or precious metals in general. And gold especially is a well understood metal, right? It is available worldwide. It is very well defined. We know what gold really is, uh, and then it is very well understood, and it is of limited supply. So there is a demand in the world for gold, and it is tangible. It is actually physical commodity. So everybody, it's a what do you say? It's a present. It is a well presented thing. So when everything goes south, that is, things are going bad in the economy. Gold is the last store of value when everything else is gone. However, there is very differing viewpoints whether money is better or the fiat currency is better. It all depends on what people perceive or think it is really worth. Okay, so for example, who own most of the gold? So United States owns say some 8,000 tons, and then Germany some 3.3 tons. IMF, International Monetary Fund, tons. So that is in the third place. So as you can see, IMF holds a tremendous amount of gold and resources. More than this is just three, a third in the top 10 or top 8, whatever. So then followed by Italy, France, Russia, China, and Switzerland. So other countries follow after that. Okay. So usually, when the gold prices go up, or when the stock markets go down, gold prices go up. When the stock markets go up, then gold prices tend to go down. But that it is only a approximate relationship. So here, if the blue line shows you the gold price in United States dollars, how much it is changing from its baseline value, which is from 1980. So how much change has been occurring? And the orange line indicates the stock market index, S&P 500, how much change it is happening over there. So as you can see, there is a tremendous run up over here from 2008 onwards. So as the economy grew, the value of gold tends to go down. Okay. But as you can see, it is not a one-to-one correspondence. So people have other expectations, other understanding, other factors based on which the gold price and the stock market prices play together. For example, here there is a massive crash in 2008, right? 2007 and 8, there is a massive crash. But the gold prices did not go up dramatically, equivalent to the crashing value of the stock markets. Because there are other factors which were playing, because the crash was primarily due to the real estate market, subprime market in the United States. Okay, so there are countries which have fiat currencies. There are countries which had money, which is backed by gold. But in today's world, the very meaning of asset has been changing. For example, Indian rupee is neither a pure fiat currency nor it is a pure money. It is today 95% backed by United States dollars because they have put their trust in the United States dollar. So if dollars value goes down for any reason, then India's economy and India's currency is going to be severely affected. India today have only 4.5% physical gold to back its currency. And also, when you have lot of physical gold in your possession, keeping it secure, creates complications. So you may have to rely on third parties. For example, a lot of gold is kept in London in a secure, safe place. Many countries give their gold over there for safekeeping. But what happens if these guardians refuse to give you your gold back? It actually happened. UK recently refused to give back Venezuela's gold because they did not like the democratically elected president over there. They did not have confidence in him. I think it is just a political game. Essentially, they did not want to give back Venezuela's gold, and they didn't give back. So that is another reason for not keeping gold. Most countries now have United States dollars reserves as backup, including India. Okay, so the very nature of fiat currency itself is that it is created out of thin air. It is a note of debt. It is they are inherently unstable, and over time they always fail. 100%. Uh, for example, so far, all the fiat currencies in the world uh, got destroyed in a period of maybe 24 to 30 years' time when they got created, right? So 20% failed through hyperinflation, 21% were destroyed by war, 12% got destroyed by the country becoming independent, 24% were monetarily reformed. A new currency was introduced, and 23% are still in circulation, but they are approaching one of these. They are approaching the death due to one of the above reasons. So the average lifespan of a fiat currency is only 27 years. That is what has been the case so far. So the median lifespan is about 7 years, and 82 of these currencies lasted less than a decade, and 15 of them lasted less than 1 year. So these are fiat currencies of small countries. So at that time, they were just created by the erstwhile governments, but they could not last for long. So you can look at this excellent article. They go into more details and depth into how fiat currencies are performing over time. There's another article here. So the British pound sterling was founded in 1694. It is the oldest fiat currency in the world. It is not backed by anything whatsoever. It is over 300 years old. So it has not gone out of existence. It is still there. But it has lost over 99.5% of its value from the original value of it. Until 1971, the United States dollar was on gold standard. So the Nixon administration decided to take the United States dollar off the gold standard because they felt very confident that nobody in the world is going to challenge the power of United States dollars. Because at that time, by the time the oil commerce across the world was beginning to use dollar for all its exchanges. So USD became very strong. And also a lot of other countries were beginning to bet on the United States dollar's stability and influence. So they were shifting from gold reserves to US dollar reserves. Okay, so the confidence level in US dollar was reaching very similar level as physical gold. So currently US dollar is not backed by anything. It is 100% fiat currency, zero backing. It is simply a IOU debt note. That's it. So when you are giving this $1 bill to another person, you are simply saying that okay, I owe you some money. That's it, some value. That's all there is. Okay, and as I said, it is mainly because of the oil. The oil producing countries recognize only US dollar payments. Now, Iran has decided to accept Indian rupees. So, other countries such as Russia and so on, they are also now slowly beginning to accept non dollar payments, or even barter system is becoming popular. So, because of all this, the US dollar being a fiat currency is now beginning to show signs of weakness. Okay. Now, this fiat currency, US dollar, is really a Ponzi scheme if you really look at it. So, on what basis the OPEC the OPEC countries or oil producing countries are supporting the US dollar as the main means of commerce, oil commerce, right? And why would any country support the United States and take US dollars as the primary value or primary medium of value exchange? It is because the United States provides military intelligence and strategic support to OPEC countries, and even otherwise, not only OPEC countries and for many other countries, in return for trading only in US dollars. So it is a military might which drives the adoption of United States dollar. So essentially, it is the what do you say, the strongest uh, becomes the most powerful. It is very as simple as that. There's nothing more to it. It is not because of brain power or anything. It is simply through muscle power and strategic intelligence support to other countries. The United States dollar has become the de facto standard across the world. So now, if you really look at it, so who has the right to print the US dollars? It is only the Federal Reserve that can print the US dollars. And the Fed can print any amount of notes and it can put it in circulation. The Congress, there is a fake approval process which is set up to give again a fake assurance to people of United States that the currency printing is highly regulated. In reality, it is not so. It is simply done by people who are not democratically elected, but they were chosen and appointed to office as a bureaucrat. Okay, so the entire value chain, who approves this US dollars, it doesn't have many of what do you say, democratic leaders in it. It is simply bureaucracy. So again, practically, a bunch of people can print US dollars and they distribute it at their whim and fancy. As I said, the Federal Reserve is a private corporation, and it was created by the same set of people who wrote the United States Constitution, okay, and who also created the Congress. It is the same group, not many different. So at the very top, those people who can print the United States dollars, which is the most powerful currency, which is the reserve currency of most of the wealthy countries in the world. It is controlled by very few people, and it is backed by the United States military and by also the oil money flow. Okay, so it is essentially a pyramid scheme, and all the countries are playing along. So if something happens in this pyramid scheme, then the whole thing is going to come collapsing down. Okay, and unfortunately, the common people are led to believe that they live in free countries, and they put their hard-earned money and effort, uh, and then they do commerce and support the economy in their country, which is entirely dependent on an external entity which can print money out of thin air and which is controlled by very few people. Okay, so that's so you need to have this understanding, otherwise you will not be able to understand how the world economy really works. Okay, all right, so the next topic is inflation. Inflation is straightforward to understand. So if something costs $100 today, it is going to cost $105 next year, because as time progresses in normal economic conditions, um, the currency tends to lose its value. Okay, it becomes less value. That is also called the time value of money. So when you are filing your taxes for long-term capital gains, it is the amount of tax is calculated on the indexation. So that takes into account the inflation from the date of purchase of your property till the current date. So when there is more currency in circulation than the value of total goods and services available in the country, then inflation is said to be more. Okay, because people have more money in their hands and there is less amount of goods and services to be purchased. So people will be willing to give more money than they were able to give in the past. So that is inflation. So in a growing economy, inflation is always present. It will always be increasing most of the time. So there is a tug of war between the bank interest rates and the inflation. So when the inflation is too high, then the banks will have to raise their interest rates also, so that people find it attractive to keep their money in the bank. So if the bank interest falls too low, then the value of the money kept in the bank tends to lose its value very quickly. For example, if the inflation is 10% and your bank gives you 8% of interest, then over a 1 year period, you will be able to buy 2% less goods and services than what you have bought 1 year earlier. Now that nobody wants that, right? If such a situation happens, people won't keep their money in the bank at all. They will rather invest it in some other instrument which will give them maybe say 11% or 12%, at least 10% people should get. Okay, so India has been seeing an inflation rate of anywhere between 3 to 8% or so. So the bank interest rates also keeps fluctuating between 6% and 9% in recent years. So they always keep a little bit ahead of the inflation, so that people find it attractive to keep their money in the banks. So as I said, money kept in bank fixed deposits will lose money over time because of the inflation. So that is what the inflation really means. It's a simple concept. There are very technical definitions of inflation. That is not really the scope of this presentation. This much understanding is good enough for us to move forward. So deflation is the opposite of inflation, where the goods and services are abundant, become abundant, but the amount of currency in circulation becomes much less. So this may happen, for example, when a country opens up its trade with China. Let's say India did not approve of trades with China for a long period of time, and suddenly it says, okay, from this year onwards, we can do trading with China. Then the Chinese goods just flood the markets in the country. So there is a lot of goods and services at much cheaper prices. At that point in time, then the currency becomes more valuable. Okay, so that leads to deflation. But now that is a very rare thing to happen. So inflation happens because people bet on business growth. So more than what the workforce can really deliver. Okay, so when the value delivery lags behind, the inflation tends to rise up. For example, if there is some innovative idea that comes up, right? So people will calculate, okay, if I can implement this idea, I am going to get some X amount of money. So for that, they will take a lot of some amount of investment. But 7 out of 10 cases, that investment will not be able to reap the benefits of the promise, which was promised by the innovation. Because the expectation of human beings in general is always higher than uh, what something can yield in practice. Okay, this is one of the main drivers of inflation. Okay, so the people tend to put more money into something, thinking that it will deliver a lot more, but it doesn't. In reality, it doesn't deliver that. So the amount of currency in circulation goes up, but the amount of products and services being expected, it doesn't go up as much as what people expect. So that leads to inflation. So if you are saving money, then that is also a driver for inflation. More money you save, higher the inflation. So Japan is one of the countries where the inflation is really high, because there people tend to save a lot, even in India. So these regulatory bodies, the Federal Reserve, Reserve Bank of India, they control the currency supply to the country to keep the inflation within some reasonable levels. Reasonable levels as decided and determined by themselves. Okay, so they can play around with it as they please. But again, people, it really matches up with people's expectation of what reasonableness really means. Okay. So there is something called a hyperinflation. So a runaway inflation happens when goods and services suddenly drop due to some unforeseen black swan event. For example, there is a war that suddenly breaks out between two countries. Then that is unforeseen black swan event, right? Then what happens is suddenly the products and the services are diverted to the military. There's hardly anything left inside the country. So, but people have a lot of money in their hands. So everybody would be willing to pay more and more money for lesser and lesser goods and services. War is such a thing, and then if you have an epidemic such as the current epidemic which is going on, a fake one nevertheless. So if something like this epidemic happens, then also the productivity goes down dramatically, so which makes the products and services much less available to people, but people are left with holding the currency that they had before the disaster happened, right? So lot of money again remains in the circulation, but your goods and services become much less. So inflation shoots through the roof. So that is called a hyperinflation. So when hyperinflation happens, it takes a long time for the economy to recover. So a lot of hard work, there will be a lot of chaos, I mean, a lot of suffering in general population happens. So under such crisis, if epidemic breaks out or a war happens, then all the black money which is kept among the people, that money comes out. Okay, so it leads to a full-blown inflation and hyperinflation. So the black money is one of the major driver for hyperinflation. Okay, and then inevitably the economic collapse happens. So let's see what we mean by black and white economies. So the white economy is the part for which taxes are paid. So you have some income and you pay tax to the government. So your entire earning is visible to the government. Okay, so all organized sectors such as construction, software, any income of a registered company or registered individuals or professionals, which is on the order books or bill books of these companies and individuals, they come under the visibility of the government. So they have to pay tax for that as per the rules and regulations of the country. So these are all called organized sectors. The black part of the economy happens usually person to person, right? Typically in India, if you want to buy some land, there is a part which is called the white part, for which you pay the tax, and there is a portion of it which the person will take as cash. Okay, so for which neither of you will pay any taxes, and that money is entirely outside the visibility of the government. Now if you look at India, it has a white economy of 2.7 trillion US dollars, and it has a equivalently large black economy. It is around the $3 trillion. So this 3 trillion varies depending on whom you talk to in the financial expert sector. But I think it is 3 trillion is a fair estimate. Okay, so that is in India. But if you look at the mature economies such as United States, Europe, and so on, they have much smaller black economies, because over time, lot of things and a lot of the businesses became highly streamlined, and they come under the government visibility. Now India is getting there fast. Recently, you must have heard about the demonetization of India, which wiped out a large portion of the black economy, and then they also put severe restrictions on buying gold coins. So which again, what do you say, take away the power from the people. Okay, so when people have gold coins, they have the power to negotiate with other people without any intervention from the government, right? Because gold is recognized worldwide. So when the government restricts the sale and purchase of gold coins, then people will have to depend on the currency, which is now, which as we have seen, it is most of it is what is say fake. And so the government has much more control over the population, and the tax net is much wider. Okay. And recently they have been introducing all kind of schemes where the government directly deposits the benefits in terms of cash to the beneficiaries in their bank account. Okay, so all these initiatives the government has been driving very aggressively ever since the Narendra Modi government took over, the BJP government took over in India. Okay, so even though it has been a very popular government, if you look at these actions, clearly the control of government over people is dramatically increasing day by day, and it is reducing the size of black economy available in the country. So so a government being a servant to the people, from that position, it is slowly becoming what you say, a dictator to the people. So how things should be done, and how much wealth they can keep it for themselves, how much they have to give to the government, and so on and so forth. So that is what is happening, and it's happening not only in India, everywhere. Okay. Now, both these black and white economies are necessary for a country to keep some kind of a balance. Otherwise, either it will go towards chaos or it will go towards a dictatorship. So, democracies like United States and India, they are striking a balance somewhere so that the population do not revolt, right? So, they keep the balance in such a way that the overall peace and quietness of the country is not disturbed. uh, the white economy is really necessary for large scale organized human life. So, without it, you really cannot build something like a big city, because a big city requires a city-wide infrastructure maintenance and transfer of goods and services from one area to another, which needs to be highly organized. So, without a white economy, this is very difficult to achieve. Okay, so a black economy is necessary to avoid totalitarian regimes. If the government, if it is 100% white economy, then everything is under government control, right? People will hardly have anything to say in the economic matters. So a certain amount of black economy is necessary to avoid totalitarian regimes. As I said, a balance is struck in between these two in today's world. So the government always works to minimize the black economy because they always want to gain control, and then people always want a black economy because, from a personal point of view, because they don't want to pay any taxes and they enjoy everything for themselves. But they also want to enjoy the fruits of white economy. Okay, so again, there has to be a balance. So when this balance goes off, there is regime changes that happen. Okay, so I hope you got a good idea of what we meant by black and white economies and how it is kept in a balance. Now let's look at a little bit more detail and understand what we mean by wealth concentration. So as time progresses in money-based systems, it always results in fewer and fewer people getting richer and richer, and poorer people getting poorer and poorer. This is always the case. It will always be the case. There is no way we can work around this. So the inequality of wealth always increases wherever it is, wherever you use money. It doesn't matter whether you are in a democracy or communism or any other socialism or any model. As long as you use money and you have this gold-backed money or fiat currency, doesn't matter. Your wealth inequality is going to keep on rising. So that's the fundamental nature of money. I mean, of money being used as value exchange, and it always ends up that poorer people pay more tax than the wealthy, because those who have wealth, they are the ones who are going to command how the rule of the land is written and how the infrastructures are built. Okay, so they always make sure that all these things are made for the rich and by the rich. It doesn't mean really the rich people are bad people. Okay, but the system is fundamentally flawed. Somehow we have allowed this kind of a system to build up to the present day. Okay, so we are in today's world. This money-based system is at its peak. It is no, we kept on building over fundamentally flawed system across, and because we have allowed fear to take center stage, and allowed third parties to what do you say, take care of us, and that has resulted in these kind of problems. Okay. So people have a lot of misunderstanding about wealth. Okay, so one of the biggest and most common misunderstanding is that if you work very hard and you are very smart and come up with smart ideas, uh, then you will get lot of money and you can easily rise up to the top. No, this is not true. Okay, it doesn't matter how hard you work, it doesn't matter how innovative you are, uh, because all your hard work and innovation will increase the wealth for the top more than what it can increase for yourself. It actually decreases prosperity and wealthiness for the people who are not on the top. Okay, because it is the wealthy people who decide the value of your innovation. Okay, those people who already have the money, those who already control the economy, they are the ones who decide what is the value of your new idea, what is the value of your hard work. Okay, so they decide that and they pay you for that. Okay, and when they pay you for that, they own the results of that hard work and innovation. They take in return for that large amount of money they are paying you, they are taking your hard work and innovation, and they are going to earn more out of it. If they are not able to earn more than what they are paying you, they will not be paying you at all in the first place, which means you cannot even get rich, you cannot even have money. You understand this? This is an extremely simple concept, but many people somehow don't get this concept at all. They still continue to believe that if you work hard, and most of the people in the population, if they work hard and innovate, then everybody in the society are going to get rich. No, that is not true. It never happens for the reasons we just saw. Okay, so here is the telling case. I'm going to give this example. This should be opening your eyes. So this chart shows in 1989. Okay, the red bar shows in 1989, and 2008 is a green, I mean black bar. So how much the total wealth of 1% and bottom 50% grew in these two periods. Okay, so as you can see, the top 1% wealth in 1989 grew by 8.4 trillion dollars of 2018 dollars, right? And then by 2000 in 2018 it grew up by a whooping 29.5 trillion dollars. That is for the top 1%. So how much did other people grow? If you look at it, the bottom 50%. If you look at it, they in 1989 it grew by only zero point 0.7 trillion, which is a fraction of the top 1%'s wealth growth. Okay, so we're tiny compared to this. And then by 2018, the growth was negative for the bottom 50, but for the top 1%, it is your massive 29.5 trillion US dollars in 2018. Do you now see the wealth inequality? How the wealth is concentrating at the top, and the bottom 50% of the people do not get anything whatsoever. Okay, so Please review this. You need to spend some time and then review this graph. If needed, you can play this back and take a hard look at this graph. This clearly demonstrates that the misconception of hard work and innovation is going to help the poor people to come up in life. No, that is not how it is. It doesn't work like that. Okay. Now here is another graph that shows the productivity and family income. This again is a demonstration of uh, how the productivity does not help with poor people to become richer. Okay, so suppose this curve, the dark blue curve, shows the productivity. So if you are able to make one hammer per day in 1945, now you are able to make about 25 hammers by 2015, 2016. Okay, that is the productivity increase we have built up over time. But does that mean if somebody got 100 rupees per hammer in 1948, are they going to get 2,500 or 25,000 by 2015? No, they are not, right? So this is the real family income. The light blue line shows that they are going to get much less. Okay, so the benefits of increased productivity over the last 35 years have not gone to the middle class productivity and the real median family income growth. So from 1948 to 2014. So you can look up this data. This again demonstrates that even though the productivity of a country or a big community keep on going up, the benefits of such productivity increase will always be enjoyed by lesser and lesser wealthy population in the community. So that is a very nature of money-based economies. So here is another way of looking at things: how much tax people pay, right? So towards this side, towards the left, are poorer people, lower income group, and as the graph moves to the right hand side, this is the higher income group. So as you can see, in 1950s, okay, this black line shows how much of tax people paid in 1950. So the poor people paid less tax in 1950, right? And then as the wealth increased for richer people, they were paying much higher taxes. So at the peak, 70% tax had to be paid by the rich to the government. Okay, so this kept the equality somewhat in balance. But look at today. So this yellow curve represents 2018. So if you look at it today, the poor people are paying about 28%. I mean, this is an average number across the world. Now, as the income increases, the income tax rate remains almost the same. But as you become super rich, you say much lower tax. Okay, so there is hardly some 15 to 20% is all the tax that is paid by the wealthy. Okay, so Warren Buffett was interviewed in one of the interviews, right? So he was talking about this. He was saying that I pay about 17% tax, and my secretary pays 32% tax. Okay, so that is a kind of wealth inequality and tax inequality the world is having today. Okay, this is another reason why poor people remain poor and wealthy people get wealthy, because they pay much lesser tax. So here is the Indian case of it. So the richest 1%, right? So they enjoy 51.5% of the wealth, and then the next one is dramatically less. The next 4% enjoys 17.1%, and the poorest 60% get to enjoy only 4.7% of the total wealth of India. Imagine that. It is incredible. So if you convert to the land ownership of India, which is a fairly large area, 51% of the best of the lands are enjoyed by very few people, while 60% of the people just use, they have to pay a rent, or they use only 4.7% of it. So as you can see, these are dramatic numbers. So you need to look at it and reflect on it, and gain a pretty good understanding of how unequal wealth is. So to add more to the point, the richest 7 people own more wealth than the 50% of the world population, the bottom 50%. The gap continues to increase. To protect that wealth, more and more police, military force, laws, and social restrictions will be made by the wealthy people, because they always want to protect it. So if they don't protect it, what will happen is, sooner or later people will come to understand, my God, what is happening? I have been working so hard. All these rich people are getting richer. Let me look at why this is happening. Then they look at it and they see that all the laws and economic structure, everything, all the bookkeeping, the bureaucracy of the country, everything is made to always increase the wealth for the rich people. So the wealthy make sure that there is enough police force and military force, as well as laws that favor them, are put in place, right? And there will be social restrictions, and they also increase the entertainment of people, such as this absolutely ridiculous cricket matches that keep going on, mindless entertainment of the masses. Okay, so because of all these things, people are kept inside a fence. So when the wealth concentration keeps on happening like this, sooner or later, we are going to reach a peak. Okay, so where the 1% owns pretty much everything, and rest of the 99.99% owns practically nothing. So what happens at that time? There is going to be a complete collapse of the economy, because the controls are not going to be adequate. Even the people in armed forces and police, they are going to see that they are being taken for a ride. Okay, now this is happening at the world level, because for a very long time the world has been in organized economies, right? So it is this concentration has been going on at a world level. So again, this is a fundamental nature of the money system, and you cannot blame the rich for this at all, because they are just taking logical decisions to make more money, just like you. It is a very fundamental nature of greed, and fundamental nature of the money system, which is responsible for this. And unfortunately, we have collectively agreed to this model, and we are suffering for it. So either we consciously understand this, and as people, we come together and reset this, right? We have to invent some new model, think it over from grassroots levels, or it is going to reset itself anyway, and it is going to be a cataclysmic reset. It is not going to be a walk in the park. So how is this kind of crash being managed, right? As time progresses, there must have been a lot of crashes, because the wealth concentration keep on going, and then some of it has to be shaved off, so that normality returns without reaching the wealth concentration peak. So typically, world economies or country economies experience crashes every 7 to 15 years, um, because the economic bubbles keep on building up, because of the increasing expectations, as we saw a little earlier. So the productivity of the people will not be able to catch up to the expectations. So a bubble keeps on building up, and the new innovations are always overrated, and so they are over invested, which again keeps making the bubble bigger and bigger. And also the financial systems are oriented towards increasing shareholder value. Okay, so they are not interested in improving oneself or the society. They are always focused on increasing the shareholder value, which is very narrow way of looking at things. So because of this also, the companies which are making the products and services, they tend to talk about much more value than what is actually practically there and what is practically possible. So so the main mechanism of which to finance such a thing is by taking up debt. So debt is taken up to compensate for this unserviceable kind of expectations. So that is going to collapse sooner or later, right? So it keeps on making the bubble bigger and bigger. They eventually have to burst when people become disillusioned with the way things are, and then economic collapse happens. So if you look at the US stock market, every 5 to 15 years, you can see the crashes happening. Okay, so from 1928, you can see the red ones going down. So it's fairly periodic. 5 to 15 years seems to be the normal case. So you can click on this and go through the details of this article. And so this graph is also an interesting one because it shows you the US household net worth as against the gross domestic product, which is the total output of a country, that is called the GDP. So on average, it is 379% of the nominal GDP each household is having. So every time a bubble gets burst, then the household income comes down dramatically. Okay, so ideal case is to be around this line, the median line, where the household income is around and proportional to the GDP. Okay, that is the normal case. That should be the normal case. But when the disproportional increase of the household happens, it really means that it is a bubble. So you can see the bubble in 2000, and then again the subprime crisis of 2007, 2008, and now the bubble is even bigger. Now we are going much away. The household income is much higher than what the nominal GDP rates are. So this bubble is going have to burst sooner or later, and this is a massive bubble. I think this the current economic crisis which we are experiencing now is this busting of this bubble. Okay, so this is again similar graph which shows typical crashes in the economy. You can see that 1991 is this crash. Then near 2000, this crash is because of the IT crash. And this crisis is again the subprime crisis in the United States, and India had a lot of things going wrong here at the same time. And here 2015, this is when the demonetization happened, and even China devalued its currency. So because of all this, we had this crash over here, and now we have not had a good crash in a long time. See, these two crashes are due to external factors. They are not because of the inherent nature of the money and wealth concentration. So if you look at this crash, this is a proper crash in 2008. But we should have had a much larger crash like this one in 2016 or 15, but it did not happen because United States and India and other countries decided to print money like anything. So they kept on printing, and that actually boosted up the economy, and they somehow managed to escape out. But by doing so, they have kept on increasing the bubble. Okay, so the bubble was never burst. So today we are looking at a bubble which is of enormous size. So when that bubble is bursting, the kind of economic collapse that happens has to be in proportion to that. So this is what I just wanted to show. So the signs of such an economic collapse is already you can see in the Indian stock market. This is the Nifty 50, the main index of the India stock market. Okay, so from middle February to this March 20th or so, there has been a 35% crash in just 1 month, and since then it is recovering marginally, but there is no fundamental reason for this recovery. Okay, so nothing has changed. So the reasons for which this crash has happened, all those reasons are still intact. Okay, so that gives you a overview of how economic crashes happen in the world. Okay, now let's quickly look at the banks, because that is another thing you need to understand how the banking system works. Again, banking is one of the biggest economic scams ever seen or created. It is happening right in front of our eyes, except that we are used to this scam so much that we are unable to see what it is. So they practically loan out money which they don't have. Okay, and they also charge interest from you for the money that you actually pay in a circular manner. We will see an example of this. Um, this is called fractional reserve lending. Okay, it allows banks to loan out up to sometimes 20 times, typically at least 10 times more money than what they have in their hand. If you do this, for example, you have 1,000 rupees. Okay, how much money can you loan out to another person? You can loan out only up to 1,000 rupees, right? But if a bank has 1,000 rupees, it can loan out 20,000 rupees to another person as a loan, because the government allows this bank to make such a lending. So, where is that the rest of the money comes from? It comes from thin air, okay, and this causes inflation. This is again adding to the inflation, and it creates economic bubbles. So, by their very nature, banks are designed to quicken wealth concentration, and hence also the economy collapses. Okay, so here is fractional example of a fractional reserve lending. Okay, so if you add 1,000 rupees into your bank, suppose you are paying 1,000 rupees into the bank, uh, since the bank is allowed 10 times to loan out, if they have 1,000 rupees, they can actually lend out 9,000 rupees. Okay, so let us say you come back to the bank and take out your car loan, so they give you this 9,000 back to you. And what is backing this 9,000? It is your own 1,000 rupees which you have earlier put into the bank to begin with. Okay, so what do you do with this 9,000? You take this 9,000, go to another bank, and then put this 9,000 into that bank. And then this 9,000 becomes 90,000 if they are going to take this 10x thing, right? If it is 20x, it is much more, it is twice of that. So and so on so forth. Okay, so your 1,000 rupee keeps on expanding. Okay, it keeps on expanding, and then finally it loads up your value to a great degree in the country. So this is how the fractional reserve lending works. So this is another concept you need to understand. So this is the fundamental nature of banking. Okay. All right, so we saw how the economy works, what we mean by money and what fiat currency is, and then we saw what inflation is and how inflation affects our economy. We also saw how economic crashes happen in the world, and we saw how banking fractional reserve lending works. So once you have a good grasp of these concepts, then you're ready to understand the present situation, what is going on now, and maybe look at some of the possible ways for you to negotiate the incoming economic crisis. Okay, so in the part two, which hopefully I'll be able to do in a couple of days, we can look at to understand what supply chains are, and why this essential services thing is really a myth, and how the small businesses across the world are being systematically dismantled, and what it really implies, and how this world debt bubble is building up, and then how the governments are printing money, somehow hoping that this bubble can be overcome, and what are the big boys, these financial institutions across the world are saying, are actually doing about this incoming crisis, and what you can do about it at a personal level, right? Because we are all there collectively in this massive bubble. And probably this may have a separate Q&A session. So if you have any questions, please post in the comments, and we can catch up. I'll try to answer it as much as I can. Okay, so that's all I had. So there are references. I will put this up as a PPT and PDF. You can download that and go through it. Click on these references and look at it. Okay, so that's it for now. So thank you for listening up.